please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The Managing Director and CEO at Envision Capital also joining us on the phone line. Good morning, Nilesh. Thank you. So now do you think that we are in for 10,500 today itself?
Good morning, Lata. I'm not too sure about 10,500 because obviously what really has happened is great for the nation, it's great for the economy, and I think it does a lot more good for bond markets and currency markets in the very short term. I think for equity markets, it's going to be an important day, and I think you would see the indices inch up. But honestly, I think it means a lot more for the economy and actual businesses rather than just the equity market.
No, but you know these pension funds and foreign funds well. Is it that some of them allocate more when you are a distance above that threshold of investment rating?
Absolutely. I think, Lata, what this does is that it in a way pulls out a lot of the fence sitters who were sitting on the other side of the fence waiting for some more positive developments. Clearly, this rating is a huge positive development. It is going to be a catalyst to drive them away from that side of the fence to this side and kind of make them make investments, not just in public markets, but also in other long-term strategic opportunities that they want to pursue in India. So I think all in all, this is huge for FDI investments, for FI investments. And I think what it does is lowers the cost of capital for India and corporate India. And I think that in turn will drive earnings and provide additional boost to markets in the very long term.
Okay. Nilesh, good morning. In that case, with the market seeing a bit of a Goldilocks scenario, domestic liquidity is as strong as it ever has been. And there could be catalyst of big FI investments as well. Do you see this market having a bit of a melt up? And truth be told, we are only looking at last 6 or 9 months, but over a 3-year period, it's not that the markets have really outperformed by huge margin. So is there a chance of this market showing a bit of a melt up now?
Well, what it could do is that this development could surely drive up markets. And as you said, that there are now 2 sources of liquidity, both domestic and global, which in turn could kind of push up indices. But what really the markets will care for, and I think that's going to be central as we especially step into 2018, is basically earnings. And I think what we've not been having is a double-digit earnings growth. And it's quite likely that we are now about to step into a double-digit earnings growth cycle. And if that looks up to be a little more sustainable, you would see these valuations as well as the indices hold up. Of course, we would have consolidation along the way. But we remain in a strong uptrend and in a strong bull market. What we've seen is just liquidity play out now. What you will see going forward is even earnings play out.
Okay, Nilesh, stay on with us. We have Vallabh Bhansali also now joining us from Enam Securities. Mr. Bhansali, good morning. You have tracked the Indian economy for so long. Your first reaction on ratings upgrade, do you think it was overdue? And what would it mean for Indian economy, Indian market?
I think more than anything else, it will. The domestics were showing great confidence in the country. It gives them a boost, but it will now, give a boost to the foreign sentiment also. So a lot of technical people who were, linked to the rating, etc., and waiting for a solid signal, they also get a signal. But I must warn you that the markets have learned to not pay too much attention to ratings. Even when the ratings were down, we were getting billions. So this in itself, is not a big game changer, but it's very, very important from a symbolism point of view. So the symbolism, according to me, is recognition of long-term over short-term, even by a technical agency. And that is very, very important.
Okay. Well, Mr. Bhansali, like you said, there are a lot of people who are fence sitters, and just now Nilesh also was saying that. Do you think that there can be an avalanche from these funds which tie their flows to such rankings?
Well, particular stocks, when we see they get on to MSCI or get off the MSCI, we do see something like this. But India, which was, where we were seeing foreign money exit, I think that money will halt. It is a matter of time to see, what other reaction happens. My sense is that this may take some time because it has come at a time when fiscal deficit, budget deficit, all are, under pressure. And therefore, sensible investors may not react immediately. But those who already had a long-term view, they get a boost that, yes, I think we were betting the right horse, and they'll continue to invest more. So I think the next 2 months are critical.
Oh, really? Okay. Critical in the sense?
Critical in the sense that, you know, the GST has shown great promise. We have yet to see some great numbers, which I am sure will happen. So I am taking a more conservative view that overall, I think this is a huge blow for long-term believers in India. The short-term money movement may take some more time because I think investors per se are more hard-nosed.
Okay. Mr. Bhansali, you know, Moody is also saying that there's a risk of downward pressure if the health of the banking system deteriorates significantly from here. We've seen, of course, the PSU bank recap. How important do you think it would be over the next 1 or 2 years to significantly improve the health of the PSU banks?
I think the banking fear is done and gone.
Okay.
I think all the market discount things in advance and the signal of recap, strong action on bankruptcy and provisioning, etc., I think has taken the poison out of all banking business. So I think I see only upside on that front. As this recap happens, I think the credit will start flowing. I think the serious spending is happening in the economy, which is now going to push the credit cycle. And all this may happen, as I said, the GST stability, some of the earnings growth, margin growth, etc., all will happen over the next 2-3 months. I think it's going to be a very, very active period. So as far as banking is concerned, Anuj, I think it's all done well.
Oh, that's good to hear, sir. And you're someone who watches this from close quarters. Thank you very much, Mr. Bhansali, for joining us with your thoughts this morning. Nilesh, I just wanted to get a little more stock specific with you. The rupees already in the NDS market, rupee dealers are messaging us that it is, you know, below 65. We closed at 65.32 yesterday. So it's some 35 paise more cheap dollar already on the cards. Will that make you shuffle your investments? You're a big IT guy.
No, Lata, I don't think, you know, movements of 1 or 2% are going to really matter too much. The reality is that the rupee has kind of started to weaken, and of course what this does is to just push back the rupee up a little. So I don't think this is going to materially change the prospects for the technology sector. The reality is that despite all the headwinds that the sector has faced, they have still been growing in single-digit terms. Balance sheets are healthy. They have been doing aggressive buybacks. And and they have been trying to transform themselves to address the newer opportunities in developed markets. So I think all of that augurs well for the technology sector, and I clearly believe that the sector has now developed the kind of skill sets and the maturity levels to be able to navigate these kind of choppiness in the currency markets as well.
Okay. Well, thank you very much, Nilesh Shah, for joining in and participating in the joy that we all feel at getting a recognition from an international rating agency. Thank you very much for your reactions. Well, we've been getting reactions actually for the past 45 minutes. We started perhaps at 7:15 when Sanjeev Sanyal, the special advisor to the Finance Ministry, spoke with us. Let's listen to what Sanjeev had to say. He called it an endorsement of several reforms and initiatives that the government has recently taken.
It's good news that we have moved up to BAA2, and you know, it's a recognition of a long series of reform measures that have been done under Prime Minister Modi, which included, of course, the bankruptcy laws, the cleaning up of the banks, and more recently the recapitalization. Then, of course, the GST. So, you know, it's an accumulation of a large number of measures. And, you know, in some ways, this is an endorsement of the, you know, long-term reforms that have been put in place. While there will be perhaps a blip up today because of sentiment, but the fact is that, you know, many of these measures are well known. And so this is just an endorsement, a step forward. And we in the government will continue to move forward with other measures. This recognizes that we are serious about fiscal consolidation, and that's in fact what has happened over the last several years. Going ahead, we are obviously going through a major fiscal shift in terms of the GST introduction. So, you know, those revenues have not yet stabilized. Nevertheless, we remain committed to the, you know, the medium-term fiscal framework.
Okay, so